Okay, well, welcome everybody to Enhancing the Accountant Bookkeeper Connection series. That is myself, Tanya Hiltz, CPB, founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. I'm not going to go through all of this about me because most of you know me. I will just go through and highlight a few of the recent. So this needs to change, the top one, because IPBC, as of yesterday, has now launched its new website. And if you haven't heard, it is CPB Canada. So I just obviously forgot to update this morning. So yes, I was the CPB Canada 2019 Professional Leader of the Year. Our Bookkeepers Bootcamp qualified for CPB Canada CEC credits in 2018, into a global firm of the future runner-up, for Firm of the Future for 2018, runner-up for Canada for 2017, was voted Practice Ignition's top 50 women globally in accounting for 2018 and 2019, and was awarded the 2018 Inspire Bookkeeper Award winner and a top 21 influencer in the Canadian bookkeeping world for 2018, and then of course Insightful Accountants top 100 ProAdvisors for 2018 and 2019, and again there's lots more. Basically, I like to keep myself busy. So this, for again, anybody who hasn't seen this slide and does not know me, here's a bit about me personally. I like unique experiences and family, and of course, there's myself and my daughter at meeting some of our favorite bands, and our favorite TV show is Supernatural, and so we spend every Thanksgiving with the cast. So there's some of the pictures. We've also met the cast of The Vampire Diaries, so it's really cool. And we started learning American Sign Language together and stopped. So I keep thinking I should probably take that off because we have not continued. This webinar has been submitted for continuing education credits through CPB Canada. We are still waiting. I followed up for the last two. They only meet once a month, and I guess something happened with them. So there are still ones from this year that are outstanding that I have followed up. Once they come through, we will send out those credits. There will be two polls that we will be asking that must be answered in order to qualify for the credits. I did not go in and actually set these up, so because today is more demonstrative, so just go ahead and type the answers into the chat when we ask those polls, and that's great. It's just to basically make sure that you are interacting and paying attention, basically. A recording of the webinar will be emailed within 2 days, and certificates for the CEC credits will be emailed within 2 weeks of receiving approval. So we have our always special guest, Jonathan from KATA Accounting. So we've been collaborating with Jonathan and his team for a number of years. We've got mutual clients. We're definitely into the double digits now, I think. What we love about them is they work in QBO, which is, very unique. It's starting to be not as unique, but really when you look at all the accountants out there, it is very unique for an accountant to actually work in QBO versus, just kind of do a little bit of work, but Jonathan's actually in it day to day, so understands what we as bookkeepers are going through and the intricacies that QBO has. Great attention to client detail, outstanding customer service, which is why we chose to collaborate with Jonathan on this as well as, top referral for our clients. So Jonathan, I'll stop sharing and you can start sharing and take it away. And yeah, that's great.
Thanks very much, Tanya. Today it's kind of exciting because we're revisiting something that you and I have been collaborating on for, I think it's getting on to 3 years, maybe? Is that right? It's been a while, but
no, it's more than 3. I know it's more than 3. I think we've been doing this for almost 3 years because we did 2 years of the half an hour, and we're at 30, 6 months into the hours. Or no, we did 1 year at half an hour, and then a year and a half at an hour. So we've been doing this for almost 3 years, let alone. So we've been working together probably 4 to 5 years, I'd say, at least 4.
One of the things that we've been collaborating on with Intuit is their Workpaper feature. And Tanya's been very, very involved in that lately. We had to kind of take a step back because the first iteration was just not that great for us. We're going to get into more detail after, and this will also help give kind of an understanding, general understanding of what Workpapers are and what we expect to see. So My quick introduction. I'm the founder of KATA Accounting Solutions, professional corporation. We go by KATA Accounting. I was a member of the inaugural Intuit Accountants Council, and I have a very long-standing relationship with Intuit. I still speak with people from Intuit almost every day. I was very, very grateful to be nominated and awarded the 2018 Inspire Accountant Award. I was extraordinarily flattered about that. I do not seek that kind of recognition often, and to have that happen organically was just thank you very much to everybody who participated in that. We are QBO Advanced Certified Elite ProAdvisors, and we are trusted advisors for several bookkeeping firms, cloud bookkeeping firms. We're a thought leader in technology and accounting, and we love to work with technology companies, particularly companies that have roots and foundations in being online businesses. Our tagline is communicate, collaborate, and innovate, and it goes in that order. Communication, I think, is the most important aspect. And if you're here for the last webinar, I think I probably put that across pretty strongly. So today's agenda, we're going to talk about Workpapers. So what are Workpapers? We're going to take a tour of QBO Workpapers. The main areas, the main tabs you see are the documents, what document manager, I believe is what I'm calling it anyway. Review and adjust, groupings and statements, and tax mapping. And then we're going to talk a bit about what accountants expect to see in, a standard file, and then there's perfection. So it's very, very rare to see perfection. I personally don't think perfection is ever attainable. I think it's something you aspire to, and you keep trying to get better, and you try to be perfect, but recognize that it's a fallacy. You can never be perfect 100%. So.
Well, and one way to aspire to that is to work with the accountant. And Jonathan, because he works with me, collaborate better than any other accountant. He has made me a better bookkeeper because of it, because I've started to learn as to what they're looking for and why they're looking for it. And if I can understand the why, it makes everything else so much easier. So, definitely get those relationships with the accountants. It'll make us better. And maybe the accountant, is not, like Jonathan, and is not, deep into the books and understanding. Maybe it'll open up a better understanding, for how we do our job as well too. So just had to throw that in there.
I'm going to get into it a bit, but there are different kinds of engagements, different kinds of accountants. And of course, there's a wide array of quality of accountants. So first poll question, why do accountants need Workpapers? A, it helps with understanding the business. B, it documents the numbers provided and changes made. C, it keeps all the supporting documentation in one place. D, it's a cool feature in QBO that makes our lives easier. Or E, B, and C. So we'll give it a couple, maybe a minute, and let everybody have an opportunity to respond.
Yeah, so just a reminder, just put the letter in the chat. And you must answer both of these questions in order to qualify for your C credits. So we're looking, we've got E seems to be the most consensus.
I would tend to agree with that. It's not necessarily everything in one place, but the documents are important. And Workpapers are more than just a spreadsheet. They're the backup that goes along with it as well. So I'm sorry if I spoke too early and just gave away the answer to people who had.
That's okay. It's because they're typing it into the chat. It's a little different. So,
yeah,
it's not like we have to cut them off. So if it, ends up the answer goes into chat, 15 seconds after we move on, or 30 seconds, when I pull the chat, I'll still see it. So it's all good. Perfect.
Okay.
All right.
Okay.
So, yeah.
So I mean, it essentially, Workpapers are the collection of documents assembled while examining the financial. This is a pretty official definition. Workpapers are the collection of documents assembled while examining the financial records of a client. They provide the evidence upon which taxes, financial statements, and audit opinions are founded. So it's the documents supporting the work that's done by the accountant. We're tracking the changes, the allocations, and the adjustments, and we'll go through that a bit when we get into our tour. and it provides a map between the final document and the books and records. I don't know if anybody has ever had to present financial statements to board or non-financial people who are really actually engaged in the statements, or like, this number is like, you know, it's general and administrative, and it says it's like $110,000. Like, could you give me more detail on that? And maybe that general and administrative is made up of a few different things along those lines. So the quality of the work papers tend to vary a lot depending on the firm, what they're doing. Whether if it's an audit, they're going to be very, very high quality. There's a certain amount of testing that's required. If it's a compilation or engagement, so in other words, if we're producing notice to reader statements, the strict rule is we can literally just take the numbers provided and put them in a tax return. That's all we have to do for a compilation engagement. And quite frankly, I would be embarrassed to put my name on something like that without at least making sure that some of the key figures are true. So we'll get into some of those things about what I would expect to see later. But let's have a look at the document manager. This is the newest, coolest part of QBO Workpaper. You can drag and drop things into a specific account. So let's say you have checking statements, you can drop those in that folder, maybe some canceled checks if you're going through an audit. An auditor wants to see some canceled checks, things like that, or key invoices for accounts receivable, and so on. It's very convenient, it's very easy, and it's very user-friendly to use this, just dragging and dropping in it. The one thing that is not existing yet, and might get a little, I don't know, controversial in accounting here, there was a presentation about Workpapers, I think it was 3 QB Connect Torontos ago, where things got rather heated in the audience. There were bookkeepers who felt what Tanya and I are striving for is to be able to work together. What I'd love to see is I'd love to be able to open Workpapers and see exactly what she's uploaded, exactly what notes she's left for us, all those things, and then be able to respond to a note and then have her respond. It's not there yet. It's not there yet. And I think this conversation that happened at a QBO Connect, I think it was QB Connect 3 years ago, was a part of it, in that there was some disagreement as to who owned the data. In my opinion, the data belongs to the client. But there were several bookkeepers there who were insistent that they should not be providing these things to the accountant because they'd spent a lot of time working on them. Why should the accountant be able to have these things? There was other people who felt that it was their data and they shouldn't have to share it and things like that. I'll let everybody keep their own opinion, but we're very collaborative. And in the end, it's not our data anyway, it's the client's. That's my 2 cents about it. If you all want to have a more broad discussion about this towards the end, that would be absolutely, I think would be very, very engaging, very interesting. But
when we're all done, we can bring everybody on to actually discuss.
Oh, that'd be so cool.
Yeah.
That'd be very cool. So one thing that's very cool about Document Manager, and we just tested this yesterday, and I hope I'm not spoiling Tanya, but you can pull and zip and send everything over. Now, we don't get to have that communication within QBO. It adds an extra layer that could result, I suppose, in some miscommunication if something is uploaded after the zip file is sent or something like that, right? But it is very useful, very, very powerful to get it all in one zip file, be able to unzip it, see all of the comments and notes, all of the attachments that were added. It's very, very cool. So we'll move on to review and adjust. This is where we tend to spend a lot of our time. We have not gotten too much into groupings and statements yet, but I'm very, very excited about that. For review and adjust, this is where you do things such as, I believe this is where you make the notes and where you also would book an adjusting journal entry straight into QuickBooks Online, things like that. You'll notice sometimes when you pull it up a work paper, there'll be a band across the top of the screen that says unaccepted changes. And then you have to, what my process is I review those changes and decide whether to accept them or not. And if I don't understand a change, that's a great opportunity to communicate and to speak with the person who made the change about why the change was made before making up your mind. I mean, some of them are obvious, right? It's like, you know, we book depreciation based upon a fixed asset schedule. I mean, this is very, very basic. But then it might be something like, there's a new sales invoice in there. We wouldn't book a sales invoice. Where'd that come from? Why is that there? Let's have a conversation.
Well, and where this is great, and we had just with one of our clients earlier this year where it appeared that the information had changed from the time we closed it off and sent it. And I can't remember exactly what it was, but there was basically a miscommunication, whether it was something wrong. I don't remember exactly what happened on that. But if we were able to use Workpapers at that time, it would have avoided any of that, because if we made a change from the time that we went through, you know, set the Workpapers, or actually opened the Workpapers, sent it off to Jonathan, he would have seen that. So there would have been no question that there are changes. And he would have said, well, why is this here after you pulled and sent me the zip file? So that's where that's really, really powerful, so that, you know, the accountant will know if they're using Workpapers and not just using the zip file manually. They'll be able to know if we accidentally made a change, and again, have that conversation and question why, so that the data is not getting buggered up for the client in the tax return and end up causing a lot more work on both sides.
There's a couple features I want to point out about here that I think are vital. One is it shows the prior year figures. So it makes our checking of opening numbers very, very easy and very fast. And we have found this year especially, and I'm sure Prem is sitting there nodding when I say this, one of the biggest challenges we've had, and one of the things that affects the bill the client gets the most, is the opening numbers changing. When the opening numbers change, we have to go back and figure out why. Then we have to make the judgment call as to whether or not that's material and requires amended returns, amended statements, a whole thing. You don't want to have to restate. It's a lot of work, and it ends up costing the client a lot of money. So using locked books is good. If you're having trouble deciding if something is material or not, it's a great time to reach out to your accounting partners, or, you know, Bookkeepers Corner group or things like that, where we're very collaborative in nature, and you might get an answer within a few minutes. Anyway, what else did I want to say about here? Oh, variances. That's another thing that I really like about this is it pulls out a dollar amount change year over year. So you can see, like, if, you know, accounts receivable all of a sudden shot up $50,000 from, like, you know, $12,000 to $62,000, it can prompt you to ask the right kind of questions that might tell you information about where the business is going, risks the business is facing. And I'm nearly positive that over the next little while, we'll see some increases in accounts receivable balances as small businesses have difficulty paying their vendors. We're hoping not to see too many of our clients' accounts payable balances going up, because that means they're having difficulty paying their vendors. But I mean, that's a possibility as well. So there's this is just a screenshot, so I can't scroll around on it, but this is a very useful tool as far as understanding what the numbers are, how they've changed year over year, where the big variances are, and then actually going on to book your adjusting entries. So the next part is groupings and statements. This is very, very cool feature. Essentially, it allows you to move things around and to put them into a single line item for a statement for the next person or user who's going to see it, be it a lender, investor, the owner of the business, shareholders, bank covenants. There could be a million reasons why you're doing that. So for instance, in this case, you'd probably group the cash together. You'd probably group the AR and allowance for bad debts together, things along those lines. There are a lot of more complicated charts of accounts that can result in a lot of work here. Our hope is that once you set it, it's set and forget. And then when you pull it out, you get some really neat things out of the zip file. You can have the cover page, like your actual letter, saying that, whether there's a compilation, audit, whatever. And then, of course, your income statement, your balance sheet, and so on. So this is a very cool area. I would recommend using this more for financial reporting. So that is creating statements that are going to be used by the managers, the owners of the business, and third parties, rather than management reporting. I just feel that for management reporting, you want a bit more agility. There are still more options using spreadsheets. It is definitely more time consuming. It takes a lot of time to set things up here, but you got to set everything up from scratch if you're doing it in spreadsheets, which is how we've been operating until recently. So I'm very excited to do deep dives into this, and over a few years, make sure that it continues with consistency. And now the good old Giphy. So here's a good example of one of the things that QuickBooks Workpapers can prompt you to. So in this situation, we've got some accounts that have not been mapped to Giphy. Giphy, I believe, is General Index of Financial Information. This is information that's used by Stats Canada and CRA to help understand and track business statistics. So it could be everything from seeing how much Canadian corporations pay in payroll in Ontario versus Newfoundland versus Alberta, seeing what kind of investment there is in capital assets, things like that. Part of the challenges is there's no regulation to do a good job on this. And we have seen a lot of tax returns from corporations that maybe have 100 accounts, 150 accounts on their chart of accounts. And when you see the balance sheet and the income statement, they're about 4 lines each. They're just putting everything into a Giphy, and they're not taking that time to separate and segregate it out. So, I mean, we all know garbage in, garbage out. So that means that, when we see these big, broad statistics, we have to take them with a degree of a grain of salt. We have to understand that there are people out there who are assigning incorrect Giphy codes, who are, not assigning Giphy codes correctly. We frequently see people having assigned a Giphy code to a fixed asset amortization that's not correct. Now, profile software is pretty cool because it picks that up. And it will say that, you can't have amortization of furniture and equipment if you don't have furniture and equipment. So it will help pick up those kind of errors, which is good. Tangible versus intangible assets is another area where we've seen a lot of issues. And then sometimes hiding stuff using Giphy. So one of the key things that we've seen hidden a lot using Giphy is seeing due from shareholder accounts being listed as accounts receivable. And of course, CRA, when they get that, they're not going to see that shareholder loan, that the shareholder owes the company money, and that could be the basis of a tax issue. Now, if they find out down the road, that could create a lot of problems for your client. And if it was you who put those Giphy in, it could create some problems for you as well. The general guidance is they want us to be as specific as possible. There was a challenge with this before where there are very similar Giphies. Well, they're literally the same thing, but one might be for farming and fishing and one is for general active business. So that's another area. How revenue is coded is extremely important because revenue is taxed at different rates. So if you have, let's say, a corporation that's earning just rental income, that needs to be listed as rental income. It should not be listed as product sales, because rental income, and I know you might be trying to save your clients some tax money and stuff, but in the end, when they do go to sell those properties or a transaction happens, CRA is going to look, somebody is going to look. And if that gets found out, it could result in massive penalties and interest. And of course, having to refile several years worth of taxes and things like that. So I would say that I know there are people out there who do T2s who may be on this call. And I would just say, try to be as specific as possible. Try to be as clear and honest as possible, and try and keep your clients out of trouble. That's the main thing. So there's a couple things here that are kind of interesting. Under the tax options, you can use their cloud-based software. We use Profile at our firm. So we export a I think it's called a GFI file, and we upload that in a Profile. And if everything is done correctly, bang, things are fantastic. There are some things that can create some trickiness. Sometimes we find that balances aren't captured correctly. So let's say you assign an asset Giphy to something that is a liability, and the liability, it's a debit, or sorry, the liability is a credit, so it appears positive on the balance sheet. When that Giphy comes in, it might come in as a positive. So sometimes you end up with unbalanced balance sheets, things like that, and you have to go through, and there's a certain degree of quality control you have to do. It isn't perfectly seamless, but I mean, there have been massive, massive improvements over the past few years. There is one more thing I wanted to talk about with Workpapers, and that is an error that happens from time to time. We've had this happen a few times. The most notable was leading up to a deadline. We have several September 30 corps, so it was leading up to the March 31st deadline, and we'd go into Workpapers and all of a sudden you couldn't see a bunch of accounts, or it would only show like maybe current assets and nothing else or something like that. So there's the methods that we've used to kind of make sure that it's not a system error is, of course, you go and you clear your cache, you log out and you log in, and for us, that's always solved the problem. The problem has never continued after that. If you have this challenge and you have somebody you're working with collaboratively, you can get on the horn and say, hey, can you just have a quick look at this work paper and tell me if you see all the data? And bang, bingo, bango, you can make sure that you're on the same page. Okay, I've taken quite a bit of time talking about the features. So we talked again, just to reiterate real quickly, the document manager. Those documents, when you zip, will be pulled out and contained in that zip and sent over. Review and adjust. This area will also be pulled out and zipped and sent on. And groupings and statements as well. So yeah, just to give you some ideas of some of the things that are available. So what do we expect to see? Reconciliations. There was a bit of a post that got into quite the discussion. I believe it was in Bookkeeper's Corner, because I was astounded that I got a set of books from a CPA who had not reconciled the accounts ever. And this is an individual who is moving to a corporation. So having a clear balance sheet is very important for this transaction. There are potential tax liabilities if it is not done correctly. So that was a concern, because reconciliation in my mind, I mean, it's the first step in quality assurance, right? How do you know things are accurate if you haven't reviewed everything? We expect to see them on anything financial. So like, well, not anything financial, is a bad way of putting it, but like anything from a bank. So like a bank statement, credit card, line of credit, those kind of things. We expect to see reconciliations. Sometimes people are like, well, there's only 3 transactions, so who cares? You know what? It's really easy. So, I mean, why not do it? If you do that reconciliation and it ties to the bank statement, it makes everybody's lives easier. Nobody has to go back and check anything. Key agreements are something that we like to see. These could include, most commonly asked for are fixed asset purchases, all legal fees, and all accounting fees. Accounting and legal fees may need to be capitalized. They may not be expensable in the first year. The invoices and whatnot for fixed assets are more important now, because the date of it really matters. There's the Accelerated Investment Incentive Program. I think its program might be planned, but that can allow for 3 times the normal first year depreciation for a fixed asset. And the date is weird. It's like November 20th, 2018, if it was purchased after November 2018, or something kind of odd like that. I would very much expect to see further incentives for investment, particularly in labor. I mean, we're all dealing with CEWS, TWSE right now, but I'd expect to see a lot more down the road. We expect to see numbers that make sense. We have had over 10 files that have shown up on our desks with negative inventory. That really, I mean, anybody should be able to catch that. We shouldn't be receiving books and said like, okay, everything's good, and the inventory is negative. That's just like, what? Yeah, you might want to check that out. Similarly, you know, accounts payable or credit cards in a debit position or accounts receivable in a credit position, they are possible. But if those balances appear and they appear funny, you should look into them. The shareholder loan, that is an account that we always look at. We hope that it's been looked at before. We generally take it as true, but we want the shareholder to agree to the balance before things are filed, because it can have direct tax implications for them. And this is an area where people will often get into tax trouble. So I didn't have a lot of slides today. Okay. So the big rocks, what's important? Reconciliations. Oh, I forgot to mention the tax accounts. This is an interesting one where you can end up with situations where like there's, you know, a tax account that says on the thing that they are owed $1,000 in HST by the government, but then you actually look at what was filed and it's, you know, they owe $10,000, and those kind of things can create some questions. So I'd very much appreciate seeing reconciled tax accounts. We've seen in the past, some people run into trouble because they have taken something in their personal name instead of company name. It's more important for corporations, especially, but you know, it's not a tax deduction if it's not in the name. So like, let's say I have, you know, KATA Accounting Professional Corporation. I get a lease agreement and sign it with Jonathan Carter, and it's between Jonathan Carter and the landlord. Guess what? Those expenses aren't deductible for KATA accounting. That HST on that commercial rent is not deductible for KATA accounting. So those kind of problems, I mean, I've recently found that there's some shockingly lacking knowledge of really basic information amongst entrepreneurs, things like how to write an invoice, the importance of having the correct name on a document, having a document being properly executed, things like that. We expect to see that the opening balance is tied to the prior tax return and that the numbers make sense. So what does perfection look like? This came out, part of this came out of that post that got into quite the discussion. Every single account reconciled would be ideal. That would be fantastic. And what that means is that it's been reviewed and it's ensured that every transaction in there is correct, accurate, and in the correct spot. Financial statements that are clear and immediately usable for analytical work. We do have a couple bookkeepers where when we get their file, it's really remarkable how little there is for us to do. It's really, really remarkable. Locked books and opening balances that tie are a must. And then any document, in a perfect world, any document we need immediately available. Even with HubDoc and Receipt Bank and all the tools and toys we have, I'm sure we all know that clients submit 100% of everything on time and appropriately. But you know, that's an area where I think coaching our clients, we can add that value and get them to give us what we need. One of the things we're trying to do internally is when those communications aren't functioning well, is capturing that earlier and addressing it earlier. It has created problems in the past, and it's important that it's in writing, because there have been times where things have been said on meetings, Zoom meetings, telephone calls, things like that, and then not followed through on, and then the client comes back later and says, well, you never told me I had to do that. So, I mean, I think personally, like if you're going to have that Zoom meeting and there are some key takeaways, send an email to follow up and ask for them to confirm that they understand. Just an extra layer should anything bad ever happen and you need to go to court. So these Workpapers, I think they allow us to see the same data live. They don't allow us to see the notes and the documents live. So if Tanya's team uploads a new document, we don't get to see that. But with the zip file, when that's sent over, we have whatever's in there at that time that it's zipped. But if there are changes made, we can see those changes in the numbers. I like that it facilitates the exchange of key documentation. Very excited for that. And I think it makes it easier for all parties to understand the journey from the raw data, from the books and records through to tax return or notice to reader statements or even audited financials. So I think this is a really neat toy. I'm really excited to work with it. I think it will save us some time. I'm not sure if it'll save us ample time because we still have to do a lot of schedules and whatnot manually outside of QuickBooks. And quite often, you know, things like loan amortization schedules are one of the most common documents that we don't get to receive from the client or bookkeeper because they don't have them. So this is some of the areas. So going back to the next poll question, what can you do to ensure perfect records? Document everything, reconcile everything, make sure every entry is approved, ask the shareholder to approve the shareholder loan account, or all of the above.
So just a reminder that in order to qualify for the CEC credits, you have to answer both of the polls and just, again, type it into chat because, yeah, that's didn't get around to that. I was still working at 10:45 last night to set up the sample file because when this is done, you're going to see me actually demo as to how I would prepare the file to send off to Jonathan, and we're going to look at the zip. We're going to see all of that. So.
I just want to address, there's a comment in here from Nicole Stanford. Thank you very much for the comment, Nicole. I like that you attach the relevant document to the transaction. That's fantastic. Perfect world, 100% of the time. The audit firm, the licensed public accountants we work with for audits and reviews, they say every year, they say, we look forward to getting your guys' files because they're so easy. They spend about a third the time they would on a normal file because of using QuickBooks Online. One of those is a shared client with Tanya. That's I should not name because that's not anybody's business. But you know, these kind of things are very, very helpful. But there are some situations where it might not make sense. So, for instance, a lease agreement. You don't want to have to pull and attach the lease agreement to every rent payment. The accountant needs it once, right? That's it. A loan amortization schedule might be another example. Shareholder agreement, that could be a key document. And one thing that we're finding that I don't think is appropriate to attach to a transaction, but are some key documents that are shockingly lacking and legally required are, okay, the incorporation, articles of incorporation, everybody's going to have those. They're pretty standard. But the shareholder register, who are the shareholders? What are their social insurance numbers? Where do they live? How do you contact them? How many shares they own? What kind of shares they own? Those kind of things can be very important. That should always be part of your corporate records and the corporate minute book. It's absolutely astounding how few organizations up there keep their corporate minute book up to date. And you are required to have a shareholder meeting and to update your minute book every year. I mean, sometimes that's meeting with yourself over a margarita, but you know, should be done. I think pretty much everybody nailed it. Everything would be ideal to be perfect, but we know that this is not a perfect world. So, all right. Perfectionist is an aspiration, not a state of being. I don't know. That might be religious from somewhere. I'm not sure. Anyway, just our Twitter handles and whatnot. And Tanya, are you ready to take over and do some demo?
I sure am. All right. So let me stop sharing your screen and start sharing mine. So essentially what we would do is I've got 3 screens open here. We are working with a demo account. So I did go in and set this up because the other demo account I generally used for training did not have access to Workpapers. So yes, I was up until like 10:45 last night setting up a file. I thought this would be really easy to set up because, as I said to Jonathan, I'll just take a sample file from QB Desktop and move the information up. Well, no, this is one of my older 10 for 10s. So therefore it had cut off and I had to manually input a lot of this stuff. So it was fun. No. So anyway, we are now usable. We've got 2 years of data in there. Last year, I just did a trial balance, and I think I covered enough so that we can actually show something. So There's a few different ways. So first thing, you can come in here, and this is what I used to do. And this is still a way that you could do it, but this is not necessarily how I do it now, because this would really duplicate your time. So I used to go into the reports, pull my balance sheet, take a look through, pull my profit and loss, take a look through. So my balance sheet, I want to make sure first off, if we go to last fiscal year, do I have the supporting documents? And as Jonathan pointed out, pretty much everything on the balance sheet should be reconciled and have a supporting document for, our checking account, savings account, undeposited funds. Have we looked at that and gone in to make sure that there's not something that was duplicated in here or entered in here by accident? So we should be clicking in and going through each and every one of these. And if we look at these are all 2019. If there's still any here, we have to look at why, and that's when we get to put our lovely detective hat on and determine, were these, maybe the client took them and put these into their own personal bank account, something like that. So we actually review this every single month, so that when we hit our year end, we essentially every month we do a mini year end review, so that my year ends now with Workpapers, if we did our job properly, is 30 minutes or less. And it's beautiful. I absolutely love it. So we're going to, go in and again, take a look, go through everything on the balance sheet for that. Again, our accounts receivable. Have we pulled that report? There are a lot of times where we'll see again, in a negative accounts receivable. Why is that there? Did we give a credit and not apply it? If you see a 0 on your accounts receivable report, again, that's showing that they're on there, that they have an outstanding invoice and a credit that maybe haven't been, merged together. So it's a great time to do some nice cleanup for that.
Can I just interject for a second?
Yeah.
One of the most common errors we see, more from self-book-kept business owners who don't use a professional, is when they'll write the invoice to the customer, they'll send the invoice from AR, and then when they get paid by the customer, they'll just put it directly to the sales account and they'll double count sales.
Yep.
And we see that all the time, and it results in your client paying way more tax than they need to.
We have a client, this happens with Square. So we have a client that they do everything here, and then they do Square. And this is one of the clients that, again, we've got with Jonathan, and it took us, a year to figure it out, and then another year to go in and say, okay, we thought we had it fixed and we can't. So now, essentially, every single month, there's a journal entry that we now go in and we back out those sales. So again, it keeps it nice and clean, and we can prove that they're duplicate sales. And it's just simply because they have their Square coming in, and so Square records the sales, and they put an invoice and they record the payments that way. So it's a pain. But we have that. So everybody else, we don't necessarily have their Square synced. I would rather take a Square report and use a Square clearing account and not necessarily sync it, or, something like that. But yeah, it can happen. So again, this is a great way to double check that. When we go down here, again, our current liabilities, we're doing the same thing to our AP. Make sure that we don't have a negative AP in there, that everything is accurate. There's nothing that's older. Where this again happens a lot on your AP is there's been an expense put in because maybe it's been matched from a bank feed as an expense, but the bill came through Receipt Bank, or the client entered the bill, whoever's doing the work got entered as a bill, and then when it came through the bank feed, it got entered as an expense. So now we've got a duplicate. So this is one place where we could check to that, make sure again that everything is true. And this is what I say to Sandra and Leanne all the time. What we have to look for is we look for what we know to be true. And that's how we should be looking at everything at year end and determining, does something need to be adjusted? What do we know to be true that can be proven? Credit card, again, that should be reconciled. We should have backup for that. Bank loans, again, we should be, hopefully being able to get a bank loan statement to make sure that that interest and balance is adjusted to that year end. Excuse me. GST payable, again, we should be taking that, and if they had payroll, their payroll liability accounts, and confirming that, and as Jonathan said, reconciling that to CRA, because if we don't do it, they have to do it. And honestly,
if I can hop in for,
please do.
Just like one thing, like, I mean, I know that the date on this one is like May 2020 or something like that. But looking at this right off the bat, I can see, oh, oh, you're going to switch it to the year?
Or
Okay,
it
yeah,
should have been last fiscal year. I jumped out.
that's fine. That's fine. Do you want to switch it
There we
or?
are. Yep, there we are.
All right, so here I can see, year-end HST hasn't been filed. How do I know that? By just looking at this. That's because of experience using QuickBooks to file HST and knowing that the HST goes from payable to suspense when you file this.
Now, one thing that we've started to do with this is, if you remember, anybody who was using QuickBooks Desktop, when you filed your HST, it automatically made that adjustment as of the end date of the quarter or the year or the filing period, should I say, for the GST. QuickBooks Online does not do that. It automatically defaults to the day you do that. So to make sure this is nice and clear, we're like, oh, hang on a second. We didn't realize that until an accountant, potentially Jonathan, pointed it out to us. And we were like, holy crap, we've been missing that. So now we go in and we make sure to change that. So again, this can be caught really clearly, because let's say we did file it, but I did not get into the GST part when I was setting up the file last night. But if we did file it and this was dated, so the year end is the 31st, let's say we did this, April 20th, this is how it would show this. It would still show this, because as of the books, even though we filed it effective the 31st, it would show that rather than moving it over to the suspense. So we are overriding the filing date to make sure it now matches up with the period end date. So that is nice and crisp and clean, which is how I believe it should be. And then again, so when Jonathan's looking at it, he's not wasting.
It's really nice for.
Yeah, sorry, go ahead, Jonathan.
No, it's really nice for us, because we can go and we can see that amount directly tied to the return that was filed. And it's like, bingo, bango. Okay, that's confirmed. If there's a balance still sitting in GST, HST payable, I would probably ask, like, why is it there? And I mean, it could be things like adjustments that happened after the return was filed, things like that. But it creates some interesting situations. I'm glad that there have been so many improvements in the HST area by Intuit. That's been very, very helpful.
Yeah, absolutely.
Sorry, please continue.
Oh, no, that's okay. So yeah, and that was great to point out. Thank you. But also, this is where it is so good to work with an accountant that you are comfortable with, because I know, let's face it, we know that sometimes as bookkeepers, we can feel that, maybe there's not as much respect from accountants, or, something. We have said that, but again, some accountants can feel that from bookkeepers as well. That is just a personality thing. That is, a little bit more old school. With moving up into the cloud and collaborating, that has completely changed that and is going to continue to change. But this is why it's so important to collaborate and work with those accountants. And Jonathan is not arrogant in any way. He is very open and discussion, very collaborative. And again, this is how he points things out to me, and I'm like, oh, great. Or I now feel comfortable calling him and asking him, because we have a good relationship. And again, it makes things better to me. Whereas if you do not have a collaborative relationship with that accountant that you're working with, they might just go in, not come back to you and ask you, and you might not realize that yes, that's filing with the wrong date, or why that's so important. They might end up just going and fixing it, charging the client more. So again, the communication comes with the collaboration, and it's better for everybody.
We take kind of a weird approach too, in that we do lean heavily on our bookkeeper partners, because in the end, it'll cost the client less. I mean, that's kind of a strange position to take, but how is it in the client's best interest for us to be charging them more?
Yep.
We try to avoid charging them more than our base rates whenever we can. Sometimes you have to. Sometimes you get the dog's breakfast, but that you got to do what you got to do to get things working. And getting files like from people who we're collaborating with, the quality is generally just so much higher than just getting them from a client. It definitely makes our lives easier.
Yeah, absolutely. Okay, so here's again. I would go through, I would open each of these, reconcile it, double check, and each of these should have supporting documents. So the supporting documents for the AR and the AP are obviously going to be the AR and the AP reports, the aging reports in there. But again, everything else kind of should have. In shareholders draw, what we do as a best practice now is if the client is pulling from there, or there's something that we're putting in there because they don't have the receipt, or something like that, I tell the clients, here it is, we're going to put it in there. It's up to the person who does the taxes. I like to have a very clear line in the sand. I do not like to encroach on what the accountant does. The accountant is the one who does the tax return, but I also do not like my liability to be affected. So if an accountant says, oh, just go ahead and put these into whichever, I actually will very nicely and politely say back, say, you know what, please make those adjusting entries because I'm not comfortable with that. And again, that should be perfectly fine with the accountant. If the client says, no, I spent that on business, I want that there. And we did have a client who actually purchased for their store manager from the As Seen on TV store, a personal hair removal system as a thank you gift to their store manager. I thought that was kind of bordering, that if that was true, it was bordering on employee harassment. So I said, no, they probably bought that for the girlfriend. So I put that in there. The client argued with me, and I just simply said to the accountant, you know what, I was not comfortable with these. I am going to leave that to you to make those calls. And then the accountant, who is doing the tax return and who is, ultimately has different liabilities, that's up to them and the client. So I do that and step back. And I found that's a very comfortable way. I've never had an accountant give pushback when I've said, listen, I'm uncomfortable with this. And the accountants that, again, I have better relationships with, appreciate that. So I don't know if you had anything you wanted to add on that before
I appreciate the way you do that. And there are times where there are legitimate business expenses that there's no receipt for, or they can't find the proper thing. But if they're not sure, and there's a history of using it for personal, I would rather see it in the shareholder loan. Now, if it's something like that's consistent, like a subscription or something, like, of course, I would expect to see that in business. Ultimately, it's the client who signs a tax return. We're not auditors. We're not licensed to do review or audit, and we don't have an interest in taking that on at this time. But if in the end, it's the client who signs the tax return, and the clients need to understand the responsibility. They need to actually look and read and ask questions. And I get this all the time from clients. It's like, oh, I'm sorry, I'm being annoying with all these questions. Like, don't be sorry. These are your finances. You understanding them is more important than me understanding them. You need to know what you're signing for. So anyway, yeah, we do appreciate that. Beware shareholder loans. They can get people in trouble. Anyway, cool.
Exactly. So what we find is the easiest to do, especially if you have a client who uses it a lot. And again, we've learned from experience. So we've started putting in the description the notes about why we put it in a shareholder's loan. So that way the accountant can take a look. The client can, can see the list of the accountant is, saying, yep, I want you to verify all of this. Here's that list of those 1,000 transactions that got put in there. Again, it can be very easily looked at by pulling in Excel as to why we did. And then again, that's between the accountant and the client who's actually doing the tax return to determine what they want to leave there or what they want to adjust out into a different category. But we found that once we started adding those memos as to why, was that, yeah, this was, personal this, we know this was this, or, it was, I wouldn't put that if it was questionable. I might put in the case of that, personal hair removal system, I might put just what it is. Because again, the client's going to see that. We need to keep our personal comments out of it and leave it very factual. Then I'm going to pop over to the profit and loss and things, as Jonathan said in here, or this is the old way that I did it, was, I'm looking in here and I'm again going to click into every account, especially down with the, with expenses here. I'm going to click in office rental expense. Is there 12? I'm going to count down to make sure there's 12. If there's 13, why is there 13? Again, maybe one got put through as an expense and one is there as a bill. So, we want to make sure that anything that there should be 12 is 12. I do know that a lot of the times we, well, now we kind of push everything through as a bill, but some clients that, you know, we might be pushing it through as an expense. Once we get down to the year end, everything goes in proper, you know, versus the date it was paid, it goes proper as to the bill date, because it's really not too big of a deal kind of through the rest of the year, but that year end, we want to make sure that it goes in where it was actually accrued. So that's extremely important. If you push through things through as expenses, at least be very, you know, diligent as to around the year end. Otherwise, that is how you could potentially end up with, again, 13 rents, or, you know, when there's not a duplicate, it could just be maybe, again, one of them was the day it was cashed versus the day it was written, which went into the next month. So just things to keep aware of. So that's what I used to do, is go through these. Again, you know, spot by spot by spot, everything with these, because we work with QBO, because we work with the attachments, every one of these has an attachment in there. I have a separate file that I keep. We use SmartVault, and there's a separate file that I have in there for a year end. And when we get down to reconciling, I throw in the subsequent, or sorry, the year end month, the subsequent month. So that way it's already there. If I have an asset, yes, I know the asset, the original purchase to the asset is already attached to it, but does the accountant use QBO? Maybe, maybe not. I don't want to go assuming. So I always then take a copy at the time that we push it through, or at the month or whatever. I download a copy of that and stick it in that file to get ready to go to the accountant. So those are just some good practices. So this is how I used to do it, pull everything together. It used to go to Jonathan. He would pull out an Excel spreadsheet. It would go back and forth. I would have to then spend extra time going through and putting these notes of everything that maybe I checked here and kind of forgot to told him, or put in the email, but because of his process, he likes it here. So that is kind of where it got a little duplication and a little extra time consuming. And we are going to go over by a few minutes. I hope that's okay with everybody. If you do have to leave, the full recording will be recorded. You will receive that. So now that we've got Workpapers, we are using the sample account. I had to take a screenshot of this next one, just simply because of I'm using my real account. So I had to blur out my real clients' names and information. So you're going to go to your QB accountant main under your clients. You find your client. You cannot search for the client, because if you search for the client, it will not give you the Workpapers option. This is the only way into Workpapers, is you will go down on this list, pull over, and click down here in the bottom right where Workpapers is green. So you're going to go in that way to be able to actually activate your Workpapers. The next screen that you're going to see come up saying it's pulling in the data from the balance sheet and the profit and loss. And then you are looking at this. So this is what comes up. So just like the screenshots that Jonathan showed you. How we now do this is, instead of doing it there, I mean, you could do everything in there and then come in here and do your adding and whatnot from here. I actually just do the full year in from here. I make any adjustments I have to make from here, and I will show you why in a moment. So if I'm adding things, it's great because I can say, hey, here's the checking account. What do I want to add? And I do have things ready to add. I'm going to add the sample bank statements for month end and subsequent month. Oh, that's the savings. So the checking and checking. Boom, upload. So now the reconciliation statement and the bank statements are there. They're in there for the accountant now. They're in there for Jonathan or whoever you're using. Credit card, I can go in and again, click add. So this is just the adding documents. I'm going to go in and add the credit card. Again, reconciliation statement. Even though they can access this, it's still nice and clean. And again, you don't know if they're using QuickBooks Online. You know, you could add this into QuickBooks Online when you do your reconcile. You can add it into there. We started doing that, but it was really kind of a pain to do that. So we just keep them where they are, and again, move them to the year-end folder, and I get ready to upload them here. Anything else that you want to add to here, we can go ahead and add up here. So I would add in, again, if there's, you know, if I've pulled the GST payable, I might add that in here. If I've reconciled all of that, if there's any assets, you can add that in. So this is again for adding your documents. So I would add all the documents in here. Then I would move over to the review and adjust. So again, just like showed, you can see this. So some things that I know Jonathan is going to ask me about, just again, from experience, he is going to ask why there are material differences. So if you click here, you notice I click that, that's going to a green check mark. That means I'm done. So when you're done, if you leave, you can easily see where it is that you've come back. So I'm going to expand on this. So now we're going to start on the assets. So I'm going to expand on this. So what do we have here? Ooh, there's a big difference here. So you can see here, I've already uploaded a statement. There's a really big difference here in the account. Here's your change. It's negative 58,000. Why? I already likely know the answer to that because I'm the one working with the client. I can add a note here. And maybe this is, you know what, due to COVID, we've got that going on, closed and, had to dig into personal, like whatever, or dig into overdraft or whatever. So this way, Jonathan can just go in and look, and now there's a little paper, there's the paper clip as the attachment. Now there's a little note here. So this is the part that he currently cannot see, but again, we can download this and zip it. So I'm going to put my notes there. So even if I've got another member of the team working on this, I can then go in and do a double check before I'm ready to send this off to Jonathan. Anything else here? What is big? Oh, the accounts receivable. That's up by 20,000. Why is that up? Again, I'm going to expand on this. I can go in and I can, make my note. Again, COVID, client not ready to write off yet, quite yet. Like whatever my notes are, again, so that Jonathan doesn't have to come back and question that with me or question it with the accountant. So I love this as much as he loves that dollar change. I love it. And again, anything that I see here that is, a big difference, that's exactly what I'm going to go in and make my note. Now down here, we have the profit and loss. So again, I would say, okay, I'm done with the current assets. If there's no notes on, everything's done on that, I'm done that. I just moved this from office supplies. Unfortunately, I realized I had set this up as an asset instead of an expense. I don't know why this is still showing up there because I moved it before I set this up, but we'll pretend that it's gone. And then again, go through your liabilities, expand it, expand these. You can go through all of this, make your notes, attachments, and then when you're done with that section, you can tick it off. So it's really easy. If you want to make an adjustment, so let's say this bank loan, I know the balance has changed. So maybe the person's made their payments out of the personal bank account, whichever, because in this case, it's exactly the same. But let's say I did not make that final adjustment to reconcile for the interest. I can go ahead, make an adjustment directly from here. So I'm going to go in and you notice the journal date, it automatically pulls the prior year date, which is awesome that it pulls that, because that a lot of the times, if you're working the old way and you do that, that's where mistakes are more likely to happen. So I can just put in here, let's say your interest, let's say it was, I don't know, $600 interest, adjust to actual balance and readjust like that. Maybe here I'm going to put the document. This keeps it in QBO. It still doesn't keep it in Workpapers. So I'm going to save and close that. I'm going to make sure that that document is attached here as well. So I'll go back and attach the documents under the documents. I can tick that off. But here's what Jonathan was talking about. Here's the changes that were made. So I can view those changes. Again, I can accept them so that way they're in there before it goes to Jonathan. So I can go ahead, accept those changes. And now it's going to update the balance sheet. It's going to update the balance on the bank loan right there. So it's automatically updated and it shows the change. And here's the adjusting entries. So it is recorded that this was an adjusting entry that was made before everything was finalized as well. So that's really good. And this is why I love working from here, because I can see everything and I can actually go through a lot quicker from here. I'm going to do the same thing down here. You click in on your services, again, it opens this report. So I can go through and double check everything from here. If it's, again, if I'm clicking on the rent from there, I can click directly through to see, okay, what do we have here? Oh, why is it not opening? Oh, because I'm in documents. That's why. So I can click on your expenses, click directly here. And now I can get in and I can see so that I can count. If something has to be reclassified, you're automatically at the reclassified transaction. So you can do a quick reclassify if you had to from here as well. So it's really, really good with that. So let's say all of this is done. Now what we have to do, it's still unlocked. I could lock it, lock and close the books. Here's, you know, all of this, you enter your password. I always pick closed, because in that way it's just easy. It's lowercase, it's easy, we don't have to worry about it. We actually close it at the end of every month as well. And the reason why we do that is that if you're using Receipt Bank or HubDoc and you push something through, we all know that those dates can get mucked up. I don't want something to accidentally get pushed through to bugger up, you know, a prior month that's closed or a prior year end or something like that. So we make it a habit of locking these every month.
Last year we had a lot of receipts show up as 2017. That was not good.
Exactly. So if you do that, that's the best practice. Then you stop them from going through, right? So now we download this to zip. And regardless of whether I know the accountant is working in QBO or not, I'm going to do this. Right now, we kind of need to, because as Jonathan said, he can't see the notes. I don't go into the grouping and statements and the tax mapping because that's not my part of what I do. Now, interesting to note is I do know that they are working on, and I will be one of the ones who will be testing it out when we get to that. They are going to start working on tax mapping into the T1s. Right now, you can only use the GIFIs and tax mapping into the T2s, but they will do that. So if you're working with Profile or Pro Tax, you will be able to do this and pull it right in, which is beautiful for that. But again, I don't know how far away that is. So here's what we've downloaded. So this is what comes in. Let me just pull this zip file over. We've got two different folders in here. So this is what I would send to the accountant. Here's all the documents. So here's everything I attach in the documents in one folder, which is great, the accounting attachments. When we open the financial statements, there's two of them. This is the only thing that I'm not fond of, because one of these, and can I get the name? One of them is, I guess, the grouping and statements. This is the financial, they actually print off as the the NTR. Oh, sorry, there's the NTR. I don't like this. I'm not comfortable with this, because if you have an accountant who is not working with this and doesn't realize, I don't want them to think that, hey, I'm again stepping on toes or doing something. So I just usually am now putting in a little quick note saying, hey, by the way, this pulls in the zips. You can either delete this, but they kind of need some of these other things. You could probably just delete this page or send it through. It's not really a big deal because it's showing that, I guess, you really haven't, but I just send it through to say, you know what, I know I don't do NTRs. This is just how it pulls from Workpapers, and that's it. When we pop into the review and the adjust, which is, really key, this is where the collaboration can come in, is we pull over here, here's my notes. Here's the attachment. So now Jonathan can see all of these notes. He can pull this, see all of these notes. So now he's not going to question those back with me unless he has further questions and my notes weren't clear enough. So I love how collaborative this all is. Like I say, the NTR is the only thing that really bothers me. Now, I'd love to know, Jonathan, from an accountant perspective, if you were not aware of this, that this just kind of pulled like this, because again, Workpapers was meant for accountants, but it is a beautiful collaborative tool. So if you receive something like this from a bookkeeper and didn't know, would you have an issue with the NTR being here?
I don't take offense easily, so this wouldn't bother me at all. I don't know, maybe this is not a good thing, but I'd be like, oh, sweet, I'll change the names there, and this will be my notice to reader letter, and I'll put my logo there and stuff like that. But like, I mean, this is available to us too. We can pull these right out of there as well. So
okay.
It is newer and haven't tested this fully yet. Tanya, I actually did have a question.
Yeah.
Amongst your team, can you see each other's notes and uploads, or is that an area of functionality that we need to test some more?
We would need to test that. I haven't gotten into that because right now I'm the only one who does these. So yeah, we'd need to be able to go in and test it. If not, we should be, because that's something like, so in theory, Shannon told me, yes, we should be able to, but I haven't tested it yet.
Yeah.
So it is something that we can absolutely, test out, or I guess you've got the team, because right now, again, I'm the only one who does these. Sandra will be helping me with these and doing the first look once she's ready for it. Yeah, but at this point, in theory, you're supposed to be able to see with the team, just not you, because you're not part of my team. You're
I'm a different company.
The accountant access a different company.
Yeah.
Yeah.
And that goes back to that whole heated discussion 3 years ago.
Exactly. It's supposed to be collaborative. And I think, again, most of those people probably, this is my assumption. And again, I did hear a little bit, because I do know some of those people that felt that it was their data. I do know that they do not have very good relationships with accountants. So again, I really think it depends on, are you a collaborative person by nature? Do you have good relationships with the accountant? Which we're all on the same team. We're all on the same team. We're all working for the client. We absolutely should have good relationships. So hopefully we can strive for that. Yeah. So a couple of questions here. So yeah, Deborah says, I guess Workpapers is not available in the US. I thought it was, Deborah. Let me look into that, because of course I am working with the US on different things that they're coming out. They're coming out with a monthly review screen, similar to the overview screen, that is going to basically be, I'm pushing them to do basically like a mini year-end review on there as well. So I'm working with them on the beta testing. Let me find out why. Because I thought it was. I did not realize that there were country differences with that. Otherwise, we would have kind of said that up front. So let me find out. I will get back to you. And then Prem said, yeah, taxes are country specific. Oh, very surprising.
Oh, sorry, that was me.
Oh, that was you. Sorry, that's right. Because,
yeah, I'm impersonating Premlada.
Yeah. So yeah, that's just, I'm really strange that, or surprised again, that Workpapers isn't in the US with just, different Giphy codes or whatnot from that standpoint. But the main portion that we use until you hit the Giphy should be universal wherever we've got gap, right? It's balance sheet and profit and loss and verifying. So I'm surprised with that, but we'll look into that. Do you need to add documents each year, for example, lease agreements? Nicole, yes, you absolutely do, because what happens is when I open the next year, it opens a brand new clean Workpapers. So what I would do in that case is I would keep it in the permanent file, and then again, it's up to the accountant. Usually if the accountant has it once, they don't need it year after year unless you're changing, unless you're dealing with the new accountant. If you're unsure, you can absolutely add it.
I was going to say, I would assume lowest common denominator, that you're not working with best in class, and that you should attach the document.
Yeah.
Just make the assumption that people aren't that forward thinking.
I don't when it comes to Jonathan, because again, I know he's already got it, but we also have a shared Google Drive that I can see what documents I've already given him. So if I want to go in and double check, oh, did I give him this? Did I give him that? I can go in and double check, because again, we're extremely collaborative together, right? So. Yep, so Deborah loves it. So yep, Deborah, we need to definitely get it into Workpapers, into the US. Oh, okay, so Nicole's saying in US, the Workpapers is called Prep for Taxes under Accountant Tools. Oh, no, not the same.
Oops, not the same.
Okay, we'll look into that. And Deborah, even if I, maybe you and I can connect up later on this week, we'll just do a quick screen share, see if we can find it in there, or maybe even later today, so that we can kind of email us out if you've got time. So I'll reach out directly to you. I've just got a meeting right after this, so then I'll just reach out to you directly right after that. If you've got a few minutes, if not, just sometime today or this evening, hopefully we can just spend 5 minutes to connect with you, see if you've got that. And yeah, perfect. Okay, awesome. So that's great. And I do have Deborah's contact information if anybody's asking why I'm not asking for it. I already have it. I know Deborah. So yeah, and we'll try to figure that out. So if we can find it, we will send that information out in here. If not, I will reach out to the people again, hopefully by the time the email goes out, because it should not go out until at least end of day tomorrow. You're not my favorite. Well, you are one of my favorites. It's not a problem, Deborah. She's a boot camper. So But so hopefully we can do that. If not, again, I will reach out and say, why isn't it in the US? We need it in the US and start pushing, because again, I work with the people at Mountain View who do this type of stuff. So it's not going to be a problem. And their monthly overview actually came from a conversation where they asked me another question, and I said, gave them a quick answer, and I said, but here's what you need. And it's actually 90% my process, which is really kind of cool to see something that I suggested to them a year and a half ago that is now coming into play, which is cool. But so anyway, I know I have enough pull that I can make this happen. I just don't know when we can make it happen, but hopefully it's there under a different name somewhere. All right, so that's everything that I had with the demo. I think I quickly went through everything. Again, covered a lot of best practices from both of us on that. Hopefully that will help your year ends go a little bit better. Karen says, thank you. Excellent webinar as always. So great. Thank you very much. So yeah, if there's any other questions, pop it in there. Jonathan, do you have anything else to add at this stage, or?
Not immediately, but I think this could be a fun one, and we should talk to Intuit about maybe doing this on a more continent scale.
Yeah,
I don't
absolutely.
know if it would be appropriate, at least a country scale.
Exactly, and you know,
I think this could be very valuable, and I'm really looking forward to our test case.
Absolutely, and
because this is all pretty relatively new things. So we have an actual live file that we are about to start on, and I'm super excited about that. And Prem, I'm sure you're going to be excited about this too.
Exactly, and we'll report back. We'll have another one once we've actually run through the test and see if the teams can collaborate. And you know, once there's more to report back to, we'll absolutely make sure that we do a follow-up and report back with that. Yeah, and that's great. So thank you everyone for coming. It doesn't look like there's any other note or questions, so that's great. That means that we did our job and we're thorough. So that's awesome. So have a wonderful day, everybody. Again, thank you very much, Jonathan, and thanks, Prem, for lending your name to Jonathan.
Thank you, Tanya.
And have a great day. We will talk to you later. And then Deborah, I will reach out. I'll reach out shortly. And again, if I can't get you right away, just give me a call back. All right. Thanks, everybody. Have a great day. Take care. Bye.